Hello guys, and glad to have you on board again today. I'm going to take a few days off the market, quite some well-deserved vacations, and therefore normally I should be back right on Monday, or actually right by this weekend, so I should be able to record the weekly podcast. But still, today is going to be an extended version of our intraday versions because, of course, as I'll be off the market, instead of going short-term time frames and anyway, I mean, that exactly just like we said last week, shorter time frames right now are totally squeezed in the S&P 500, which means statistically they're worth like shit. So we could be talking about them, we could be looking at charts, anything that is below 1 hour chart time frame right now just doesn't mean anything statistically speaking. Therefore, all the signals that could actually occur right there are totally pointless. You could eventually trade 15-second charts up to 1 minute eventually, but anything that comes closer to 15 minutes, 1 hour chart time frames, everything's all squeezed in to a very, very, very dense technical area, closer to the historical highs, obviously. So a lot of speculation is going on as we speak. People are totally expecting that, all right, we're 0.5% off the historical high, so they're totally granted. So first and foremost, we're going to have a look at the chart today when we get to the technical part, and I'll show you that, I mean, just have a look at the 2000 bubble. Actually, we failed at less than 1% of the previous historical high after failing very violently. So there are precedents in which actually contexts were pretty much similar. We had a tech bubble back in those days, and the S&P 500, which is much broad-based, somehow failed very close to the previous historical highs, even though I suspect, I mean, I wasn't trading back in the 2000 area. So the thing is that I don't know what the fuck was going on back then. But I suspect somehow psychology might be something closer to what we're experiencing today. We were in a bubble with very experienced, with very, very expensive stocks, sorry. Definitely people were narrow-minded, short-sighted, everything like that. And they probably felt like, oh man, we're just 1% off market top. Definitely gonna be there tomorrow. And actually ended up falling off the cliff for more than 60% later on. I doubt we'll get that low nowadays. So don't get me wrong, nothing ever is a copy-paste pattern. It's just that I think both the technical area, the sentiment, and all of those things are really leading me to believe that something very ugly can happen. But you know that I also told you about this for several times recently, and therefore I think going down this repetitive theme all over and over again is totally getting pointless. So I shared my sentiments. So far it's not actually happening on the charts. Therefore, until it actually does, all of those things can just be bullshit. So just don't trade because of an ID. Just remember that an ID always comes with risk management before going into a trade application, okay? So that's the perspective, and at least that's what I'm trying to teach you out there. My sentiment, I definitely have it, but I can definitely be biased as well. I doubt I am, but I could be, and therefore I'm definitely not going to trade just because of it. So anyway, let's get to context and study what we have today. All right, context is just, man, oh, fuck. I'm sorry. I could just be unpolite in here. Just, I cannot stress enough how totally out of any rational standard we are right now. So the recent news flow is like, right now, Russia is saying we do have a vaccine, but it's just validated by our health minister. I mean, what the fuck is going wrong? I mean, since when a political person just says, all right, this thing's great, let's use it. Jesus motherfucking Christ, I mean, this thing just absolutely worth shit. So how can it actually make headlines? I just don't get it. It feels like right now, the financial institutions, analysts and stuff like that, what the fuck are you doing? I mean, I'm really questioning the rationality of all this. These people are getting paid to publish the bullshit like that. I mean, this has absolutely no intrinsic information value. This is really, really dumb information being relayed all over the place. Totally crazy. I mean, if you've got nothing to say, just shut the fuck up instead of relying and transmitting bullshit information. So I don't know what's going wrong with the analytic corporations right now, but Jesus motherfucking Christ. It's really, really crazy. But just on top of this, I mean, this is coming from Russia's end. So you would say, all right, we're pretty much more rational right now in the US. The fuck are you? Really? Donald Trump, who is signing executive orders, promising stuff that can actually never be put in motion without Congress validation. So he says, all right, I'm going to give you revenue tax break starting on 1st of September. What the fuck? You need to get congressional amount for this. Congressional validation, you're never gonna get it. So what the fuck are you talking about? It's not gonna happen. It's definitely not going to happen. And just as it wasn't enough, yesterday it goes Twitter again. Oh no, I think it was on an interview, or no, it was during the COVID press conference. Like, all right, is now thinking about giving financial revenue tax break. Oh man, that's great. You're going to get cash, and on top of this, you can use this cash to make money in the stock market, and you're not going to be paying taxes over the gains. Oh, great. Let's just get into the bubble. It's just, oh man, this guy is a car fucking seller. This is commercial thing. This is just like persuading people that they have to go into the stock market, that anything is going to be great out there. They have to be there. Jesus motherfucking Christ is pouring people into a bubble, and that's very dangerous. The guy is the fucking POTUS. So what the hell is wrong with that? And how people are getting to spread the word around. It's supposed to be total bullshit. Same thing goes in here. It's not going to be happening. It's not going to happen without congressional validation, and this thing will never happen. So it's bullshitting totally, and people are coming and falling for it. So I mean, all right, we're gonna move on, because I can be so pissed off out there, and just I cannot stress how hard I want this thing to terminate. Just this guy going out of office. 4 years of totally irrational market behaviors. Jesus fuck. I can't wait to get back to usual trading, because it has been hell of a pain for fucking years in the market with this asshole. Anyway, moving to sentiment. Of course, finally we're into extreme greed. That's totally expectable. So many noobs brought into the market, sentiments going high, risk is down. There's no risk, obviously. All the professionals are warning about the fact that valuations are very stretched. Risk limitation is totally non-existent, as the actual real risks are rising. But I mean, who cares? Of course, right now, I'm not making money. I'm a professional. I've been trading market for years. I know what the fuck I'm talking about. And I cannot stress how many headlines I see from Robin Hoods who are making money. They're actually overperforming the stock market right now. I'm underperforming. They are overperforming, and everything is fine. I'm probably just like Warren Buffett, one of those old guy of coming from the old finance. And we're the new finance, and we're gonna make the market best than they ever been. What the fuck? This is sales, commercial stuff. This is not how the market works. And this guy's definitely gonna end up being proven wrong, but the question is just when, all right? And market can be way more irrational than you can be statistically relevant to trade it. So actually, patience is key right now. It's not about fighting these guys because they're stupid. They're gonna be wrong in the end. I know that for sure. It's just a matter of time. And you just need to be patient enough to be there to prove them wrong, and to be the actual smart guy in the game. So you see a lot of dumb behaviors, just make sure you're not dumb yourself. I think that's the only thing we could tell right now. And I doubt this extreme greed is actually rational right now. So I'm not following it, but fighting against it, being irrational myself, is definitely the worst case scenario. Okay, so we definitely need to be real cautious with that. I know I can't get emotional with Trump, because damn it, this guy I can't take it. I mean, this guy is just everything I hate impersonated into just one single ugly person. But that's all about it. I mean, and he's making the market, and it's just, oh fuck, I never thought it would ever be possible. So let's go back technicals. What we have today driving price action is the breakout resistances we see on the DAX, Nikkei, and Eurostoxx. And of course the VIX breaking and finally managing to significantly, beautifully close below those support levels. So we finally made it. Market is calm, and we know where to go. Historical highs are granted. All of the stuff we talked about. But little problems. First thing first, DAX, Nikkei, Eurostoxx haven't broken out of the ranges. The only thing they've done is breaking a trend line in a range. So trend lines in a range always got broken, but they generally are broken to bring in the dumb money. So I would say not a very smart money move today. Really feels like a dumb money move, in which we get to resistance so the smart money can eventually sell. At least that is generally what we do in those contexts. So we'll see what the smart money does today. If they sell, it's not going to be pretty, because that means they're selling the dumb money getting in. And That's something to bear in mind. I'm not going to go 2 times ahead of the market, but it is what it is. If over the next 48 to 72 hours, let's say before the end of the week, we were retracing back to today's low point in all of those assets, that would mean I was right. The dumb money got in as the breakout, the smart money sold it, and we will start breaking supports later on, and it's going to be the beginning of a large trend, because this is not a tiny move. If the smart money is getting into selling the market, means they expect at least 10 to 15% drops. All right. Once again, these are smart money patterns I know about. This is not the dumb stuff you'll see on Robinhood and stuff like that, in which they say, oh, we've got a contraction triangle, market is trending, we're gonna break to the upside. Yes, man, definitely how the market works. You taught me my job. Oh man, I can't laugh more than that. It's just getting funnier now. So here's what the smart money is actually doing. Okay, so smart money is probably trapping the bulls into some stupid patterns, and in the same time they're selling bonds, which is something I've been talking to you about for several days. I told you to have a fucking look at these, and if this rolls out of control, means the smart money is getting safe haven, and if they go safe haven, what the hell do you think they're going to be doing with stocks? They're going to be selling them, all right? So the problem is we're fairly overpriced in stock markets, and I'll show you that right now in the chart right after. We see smart money starting to sell bonds, and this is not Robinhood traders who sell that thing, all right? This is really rational smart money investors. It takes billions to get into those markets, or at least hundreds of millions. So if you're really going to get access to these markets, you really only need to be rich. So this is smart money behavior. It cannot be Robinhood traders in there. So I see smart money moving. I see DOMs getting in. That's what I say about today. Over crazy sentiment, totally stupid news flow, absolutely no volatility, danger as stupid money gets in, smart money probably getting out of risk. That's the consensus I have today. For a context, that's not the fanciest type of thing we could get. Let's get right to the chart right now to see how prices react, and most importantly, where the fuck are we right now? All right, this holds in a single sentence. We are dealing with monthly Bollinger Bands, just like we do quarterly Bollinger Bands as well. So quite some larger time frames volatility boundaries. And just for those who don't know what the fuck that is, volatility boundary is a standard deviation. So it's the spread of actual closes away from the moving averages. Basically, let's make it simple, how volatile the market is. And generally, market behavior tends to be stopping to trend follow when we'll get closer to 2 standard deviations away moving averages, okay? That's exactly what we're doing, but not on just on a 2-hour chart or 15-minute chart in which everyone is getting short-sighted and narrow-minded into. Now we're dealing with quarterly fucking volatility boundaries. So smart money is probably going to act out there, because believe it or not, smart money isn't short-sighted only. They can be from time to time when they want to trend follow, but they also are aware of much more complex multi-time frame patterns. That's what I teach for the most advanced guys among the community, but of course takes quite a lot of time to process all those information. So today, even if you don't really believe me, I would say you will soon understand me. At least it takes a little progress for your trading to actually understand how multi-layered time frame this thing actually is, and the fact that today we're dealing with very large time frames, and the early activity I see on bond market today isn't suggesting a safe move to follow, but most likely the type of move to reverse. So yeah, you're gonna say, fuck Phil, you're talking about reverse for days. It feels like I'm repeating myself. Yes, I know. It also feels like I've never seen such a stupid stock market than it has been over the latest 4 years. So yeah, it might be stupid, but just like I said, the only rational behavior out there is just to follow your goddamn plan and to be rational yourself, not to be stupid, okay? So what happened last year, it was absolutely crazy fucking stupid. But did you think I stopped trading back then? Yeah, I cut down the services because I was nearly getting crazy about the market and the fact that I didn't understand shit about what was going on. We were dealing with historical prices back then. Are we today? No, we are not. People think we do, and people think it's inevitable. All I can tell is that as long as it is not, it is not. So even if we have to fail 0.5% from historical highs, let me just show you something. All right, let's get back to the 2000 bubble. All right. I'm going to have to scroll back in time. Yeah, 2 decades away from now and still has to go. Okay, we'll get it. All right. Here we are. So just trying to flush all the future forecast and stuff. Damn it, I cannot do replay on these future contracts. But hey, where were we back in those days? Just less than a person away from historical highs. I bet everyone was thinking about the same thing. Let's just try to remove all those prices from your head, because of course, if you know what happened afterwards, that totally blurs your mind, which is not the point out there. So let's try to be rational. Let's try to hide whatever the fuck that was. Black box. All right, so shit. Get on top of prices. All right. Jesus, man. All right. So I cannot move, but here you go. What would you think about such a market? You would say, all right, higher low points. Definitely feels like we're going to make a high points. Everything is opened. The context channel remains bullish. There's absolutely no problem. Oh, fuck me. Just have a look at those big, beautiful ranging signals earlier than that. So when I say we're ranging right now, I think we actually do. I see a lot of people feeling trending behavior. But if they actually are trending, they're going to have to go historical highs. And as long as they don't, it's not. And that's the big problem we might eventually be facing nowadays. People take for granted something that might not be. And the problem is today I see smart money doing some things. And when they do things, that doesn't mean it's necessarily going to happen. Because when they might be starting to sell the riskier assets, they're probably going to sell the top 5. They're going to profit take over the Microsoft, Apple's, Amazon, Google's and stuff like that. But the thing is that on the opposite hand, we do have all those stupid traders getting in those markets because they think it is a future and stuff like that. So there is still some demand for those assets. And that is a very tricky question to answer. Is the demand going to come up for the offer? This is a tricky question. All I could say is that my job is to know what the smart money is doing. That's my job, to try figuring out what the fuck they're doing into the marketplaces. I think they're selling right now because I have fairly reasonable informations, early informations and correlations suggesting they go fly to safety. But when they do, I need to see prices confirming, because what actually moves my personal equity in the market is the fucking price movement. So even if I know smart money is probably doing something, that doesn't mean the market will do just like that. Smart money is normally supposed to move prices, but there are some times in history in which the dumb money can take over for a little while. So if we're on the verge for these moments in which the smart money is failing versus dumb money, can happen. Don't be stupid enough to fight it, okay? The only smart choice to make out there is to remain rational. I think technically speaking, we've got more than enough information right now to switch to conclusion. All right, 18 minutes in, normally we're far off and far into the conclusion, but I have a very long conclusion to say as well today. So it is going to be an extended podcast. I've made it clear right at the beginning. So, all right, the thing is that we do have an extreme, very extreme sentiment right now. I can't stress how stupid that is. I know how emotionally and psychologically painful that can be. That's the reason why I've always been clear with you guys that the reversal trades can only be done with experienced traders with a lot of psychological managements required, because even for me it is tough. So I cannot even imagine how complicated that must be for those who are less experienced, but still experienced enough to go for reverses. You need to be taught one very important lesson nowadays. Resilience is absolutely important, and as long as you're not invalidated, you need to keep on going. I haven't been invalidated yet. The only thing today is just I'm dealing with prices in the middle of nowhere, which I don't like. The only last prices I could have been dealing with was yesterday high points, but it failed once again. Was the resistance area we've targeted last week. Totally failed, as we just basically crossed it like it was nothing. Okay, today is just the only thing that led me to trade is because I saw these early activities on the contracts on the bond market. So that's the only clue I'm following today. I took the early short-term signal I had in the morning. It was approximately 11:30 a.m. in my local time frame. So if you want to know what prices I caught, I'm not at the market top today. I don't have a perfecto. I do have a decent price anyway. So my only thing today is simple. It's going to be either it works or it doesn't. Because as tomorrow I'm getting into vacation trade, I'm not going to take a trade into negative risk management or stuff like that. So if it doesn't work today, and if I cannot safely put a stop loss, I'll take down the position. It's simple as that. So if the position cannot be secured today, I'm off, and I'm going to wait for the signal to actually validate. It means that I'll go into everyone else's position. When I'm going vacation, I don't have availability to be really there to react instantly on the market for reversal opportunities and stuff like that. Therefore, I'm just going to stop looking for reverse. Hopefully the reverse will not show up when I'll be on vacation. That would just be a very, very painful sentence for me, meaning that I go for 2 weeks looking for a reverse or something like that. It's not 2 weeks. The latest trading activity I've been like for 5 days or something like that. So I'm looking for reverse for 5 days, 5 trading days. Each and every day is a painful get in, stop at break even, get in, stop at break even, and etc. to actually end up having the reverse when you take your vacations. That would be pretty pissing me off. But I mean, these things can happen. And like I said, that won't drive any irrational behavior on my end. So if I see those reversals happening when I'm off, and if I actually miss them, which can happen, no big deal. All right, I'm going to take it a little bit personal, of course, but that's not going to drive irrational behaviors. What I'll do is just like everything else, everyone else should do. You need to stick to the plan, which means if you're not an experienced trader, or at least an experienced enough to get to search for those reverse, all you can do is waiting for a reverse to actually validate. When you see one, which means a reversal trade took by experienced traders that actually reaches out validation and reverses the context channel, you're going to look for the third range boundary following. There probably is going to be one. It's probably going to be bearish range opportunity, 61% retracement, right pulling back closer to the resistant context. Just sell that shit, put a stop loss at the market top, and hold the motherfucking trade. Just don't take a range trade out there. If you really take the third range boundary, just be smart enough to take 50% off the table and hold the remaining 50%, because we're dealing with much, much larger time frame things in here. That's the message I want to send. We're getting to monthly and quarterly volatility limitations nowadays, suggesting that if a reverse actually shows up right here, now, not 5 days ago, all right? 5 days ago was a totally different context. Now we're dealing with those volatility boundary, which means we're playing much bigger time frames than I thought. I think if a reverse happens in here, we're not going to get to those price until at least a couple quarters, which means couple quarters of consolidation down the road. I goddamn don't know how much we will retrace in between. Can be just a flat consolidation. Who fucking cares? My job is to cover my portfolio for the potential downside risks. Therefore, I would definitely want those cover trades. I'm not looking at short selling the markets actively to make huge gains. I'm mostly selling because I want to come up for the potential pullbacks I will have in the equity market. Okay, I'm buying this market, which means if it pulls back, I'm going to take some gains off the table. I'm going to lose some equity, and therefore I want to compensate for these losses. If it has to go for some short selling, pure net short selling opportunities, I'll let you know. So, lesson today, don't go aggressive. If you do this, and if the market proves you wrong, you're going to be the dumb one in there. So, even if you think, oh, the dumb traders, the one I talked about, all right, they're probably dumb, but they can be smarter than you if you're dumber than them. Okay? So, the thing in here is that they're dumb, I can tell you for sure. They're going to end up losses sooner or later. It's just a matter of time, but don't be dumber than that. If you don't want to be, don't be too aggressive. Don't try to play reverse if you don't know how to do it or don't know how to handle it. Wait for the signals to validate. And when they do, don't hesitate to jump in. There won't be too many opportunities. There probably is going to be just one. And if you miss it, you're never going to find any other afterwards. So be resilient, have a fucking plan, be patient, and know that there will be one thing to do. Don't miss it. Okay? Wait for the market to reverse. Wait for it to break the context and pull it to the downside. And if there's any short-term pullback to these resistant contexts, sell the shit with a stop at the market top, pure and simply. Okay? Until then, you patiently wait for the market to validate. It can take days. It can happen today. I goddamn don't know. It just takes how long it will have to take. If we ever go historical highs, then that means you're going to have to wait as well for these trades to validate with a daily confirmation. You need to see a daily candle breaking through the latest supports. Otherwise, stay the fuck away. If we make new historical highs, you wait for the VIX to make a bullish engulfing on a daily pattern if you want to trade again. Okay? And today you need to actively have a look at whatever happens in the bond market. If that's just pulling back to support to rebound and save the stock market today, that's just one another of those days in which actually nothing happens. Just a risk management for the dumb money, for the smart money, and nothing really too fancy. And that wouldn't be much of a flight to safety. But if we actually close below the support level today, that means the smart money isn't supporting bond market anymore. That's not a good sign for the Fed. That means even if Fed is pressuring prices to the low, or pushing yields to the downside, that means investors are asking for a premium. And you need to understand what that thing is. The Fed says a director number, all right? 0. They basically said, all right, we're not taking and asking for money when we lend. But the thing is that they're not just that thing. There are risk premiums, risk for default, okay, and mostly risk for inflation. Nowadays, inflation is going totally crazy. I think the inflation numbers are totally off the reality. But I don't think the bond market will take it for granted. I think the smart money knows inflation is down the corner, and if they really think it, they're going to price it in the bond market first, okay? So if the bond market starts to react, that means smart money figures out inflation is down the road. And that might not be pretty. Okay? So be resilient, be patient, and don't be stupid. That's the lesson for today. That being said, I wish you guys a pleasant end of week. If you have the luxury of taking some vacations, then fucking enjoy them. Don't necessarily have a look at the market. Life is much more important than trading, okay? If you still want to trade or stuff like that, then know that looking at the market 3 times a day is more than enough, okay? Have a look at the end, at the mid-European session, the equivalent of midday in my local time frame. Definitely one appropriate thing to do. Then, of course, have a look at the Wall Street open time and closing times, that 3 times a day in which you can have a look at the market and enjoy the rest of the day for your vacations, pure and simply. Okay, so enjoy them if you have the luxury to take some. If you don't, then just work hard, but be patient and mostly don't be dumb. See you guys again next Monday.